Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Sorry, I'm still getting the lights working here. Wow. Friday was quite the trip, and where that puts us at for the rest of the month is anybody's guess, but I certainly think that we're at a key point in the market here, although we're also getting to a boring point in the market where a lot of liquidity is going to leave. So we might see some movement, and it might be very frustratingly difficult to take advantage of it. Let's go to the charts and look at it here. See where we're at. Let's start with the treasuries. Treasuries did take a little bit of a dip on Friday. There was some hawkish Fed rhetoric over the weekend. It looks like we're having another little bit of a sell here this morning. The Federal Reserve still being incredibly hawkish. Now, I would expect them to speak hawkishly up until the very point that they feel that they need to shift, and that point is not yet. So I'm not concerning myself so much with the Fed being hawkish right now, but it's certainly still driving orders and we can still trade off of that. In the E-mini, they started out on the downside foot, but then into the close, the big options expiration Friday, they had to cover and we rose back up. Now, given that all of the action that month was kind of selling, I think there's a really good chance that this morning we might see a little bit of buying on the unclench, but don't discount that there is still going to be some selling out there from tax loss selling, and apparently some funds need to rebalance from equities into bonds. So this one's going to be super interesting which way this goes. Oil, a little bit of volatility on the open, but mostly flat here. Natural gas, a little bit lower this morning. That's good. Gold and silver. Gold and silver staging a bit of a rally here. Why my music stop? Why my music stop? Come on. There we go. All right. Kappa on the upturn, just slightly. Bitcoin taking a bit of a hit on Friday as Binance continues to halt withdrawals from their exchange on various coins, and the dollar is still looking okay at 104. 104 is kind of, it's funny how this works, but if we come back over here to like a longer term chart, something that you might notice is that we've been around this 104 many times. So like it was support and now it's kind of being resistance. But what I've found that these kinds of price levels do is once people see a significant area of support or resistance, they all start trying to trade that, and then it just ends up rotating around it. So we might be around here for a few days. So that's where we're at. I think my default flows is, at least in the treasuries, is probably going to be buying, but we've had some downturn here early in the morning. So let's see if we can find anything. Nick Timmeros, in Japan, inflation is rising, the yen plummeting, and some economists and executives blame the negative rate policy for eroded competitiveness and undisciplined government spending. All that has put pressure on the Bank of Japan to finally raise rates, says Nick Timmeros. That would be significant, wouldn't it? That would be really significant if Japan started raising rates. Oh, let's fix the light. There we go. Oh, so much better. Oh, much better. This light over here kind of adds more color. Like if we want to make things more dramatic, let's see here. Ooh, see how it's a little bit more dramatic? Is that a little bit more dramatic? Is that too dramatic? This is what it was. 55. And we go to 7,000. Or we could go red too. There you go. Right, see, we can make this one red. We can make this one blue. No. Let's just sit it with like that one for a little bit and see if anybody notices. I don't even know if you guys are paying attention yet. I think maybe some of you are still sleeping in. Okay, so now, meanwhile, over in Twitter land, Elon Musk put a poll out saying, should he resign from Twitter or not? I will abide by the results of this poll. And last I checked, the resign side was clearly winning. Shall we go and find that? Shall we go find that poll again? I'm sure that it's probably still the other way. And Twitter shares apparently jumped up after as he did that. Oh, come on. Link me to the tweet. There we go. Yes, 57%. No, 42%. That's actually pretty close. But since Twitter leans left, I would expect them to want Elon Musk to be gone, and ergo why he's losing. But I'm gonna bet you it's not all what it seems. Like, I don't think that he would lie about, oh, I'm just kidding, I'm not gonna abide by the results of the poll. But I bet you it's gonna be like, who you get is not gonna be what you expect. Like who would take over for him? Or like there's gonna be something about it that's gonna be a surprise. Nothing about the things that he's done has been like straightforward. You know, it could be a honey trap or something like that. Binance is not halting any withdrawals. That was not when I saw last. So they have, like straight up, they have. I don't know if that's currently the case at the moment, but that is why they were dropping on Friday. Let's see if I can find I'd have to go back several days, so it'll take me a little bit to find it. But and the thing is that they stop the withdrawals on like a coin by coin basis, so it'll be like that coin is locked up. Let's see here. What's the best way to sort to find this? Wouldn't be surprised though that it's changed. There you go. So this was posted by somebody 2 days ago. PAX, withdrawal suspended. Enigma, withdrawal suspended. He was, you know. Next page. More. I mean, there's a bunch of coins I've never heard of before, but Treasury's touching a little bit lower there, although not a lot of volume coming through at the moment. So it kind of remains unclear, like how exactly bad it is over there at Binance, but let's just say the market is concerned, right? I mean, this is kind of the time. Some guy on Reddit says, listen, I've seen lots of reports over the past week of people complaining about not being able to pull money out of Binance. It hasn't been consistent. It sounds like it kind of comes and goes, but the reason, I'm just telling you, the reason that Bitcoin was down on Friday was largely because of concerns about Binance. Pretty confident on that one. And to be quite frank, the only reason that Binance has gotten into the position of prominence that it has is because they've basically been faking activity the whole time. Everybody knows that. Everybody knows that one, right? Everybody knows. Well, I mean, it's like one of those things where it's like, well, how do you prove it? But I don't trust the volume numbers that come out of Binance one bit. And my metrics still show that there is plenty of air to still come out of this cryptocurrency bubble. And especially if the Federal Reserve keeps this up, like, here's the thing. How long can they hold out, right? Because it's just kind of been like an exchange will go down, and then it's like, oh, everybody else says we're fine, we have proof of reserves, etc., etc. And then a couple of weeks go by, and then somebody else goes kaput, right? And as long as the Federal Reserve continues being hawkish, like, it's gonna screw them over. How many more can go down? According to my metrics, a lot. According to my metrics, there could still be like another 50% decline. That doesn't mean it will happen, just that it's like based on the amount of money going through on the blockchain. That's kind of the historical average, let's say, or the low end of the historical average. I really want to know what it is about the treasuries. It seems to me like it's usually sell. Like, the first thing is the sell, and it starts before the open. I wonder if that is some sort of a large meta order from a sovereign wealth fund that's been executing over a long period of time. But the downside that I'm seeing at the moment is not terribly decisive. It's kind of slow. It's nonchalant about the downticks. It's also flattening. Morning Uzi is flattening. I would say though, the liquidity in the 10-year, not too bad. Liquidity in ES could do better, but liquidity in the 10-year is not bad. There you go. So there's one person saying, yeah, Elon Musk will step down, but he didn't say when. So maybe he'll step down in 2 years or something like that. I'm telling you, there's going to be something. There's going to be like a surprise about it. I almost guarantee. Oh, you know what? I forgot to turn my squawk on. That might help. That might help a little bit. Just a bit. We do have a 6-month bill auction, 3 and 6-month bill auctions today, at 11:30 Eastern time. Yes. Excuse me. I don't know what was with that. Good morning, QJ. Looking at like my my watch list here, like what's the biggest winners and losers? Well, the biggest loser is natural gas. Biggest winner is oil. Oil up 1%. So I'm looking at that and I'm like, oil is the top winner, and I go and look at it. It's just been chopping around. Oh yeah, but it's oil. Like it's been moving like 10% lately. So of course it's at the top of the list. Yeah, it's oil. It looks like oil is testing the upside at the moment. We'll see how far they get. I think we might probably gonna just be, or probably should just relax for the next 45 minutes or so. What's this from News Squawk? Twitter, Elon Musk should replace himself with Sheryl Sandberg or Sarah Fryer. Wait, who's that? Don't know who that is. That must not be news like I thought. Wow, wait, really? Epic Games to play $520 million to resolve FTC allegations, reports the Wall Street Journal. That's interesting that they just decide to. That is a really big fine too. $520 million? I want to find something about that on Bloomberg. Might not have it. This might be too new. Morning mission. It looks like everybody's filtering in. It was only 11 minutes ago, so it looks like not everybody's caught on. Oh. $520 million to resolve Federal Trade Commission allegations that the Fortnite video game developer violated online privacy protections for children and tricked players into making unintended purchases. That is like such a big... Man. Can they really... I guess they probably can. They probably have billions and billions in value, and they have big investors behind them too, but still, that is nutso. That is 520 million is just like such a big number to me. that's like 5 beachfront homes, man. Binance to acquire Voyager digital crypto assets for $1 billion. Think this downtrend continues? I mean, it's kind of been a slow churn, but they haven't backed off. Well, unfortunately, Epic's Games is not a public company. There's public companies invested in them. For instance, a lot of their money is from ByteDance. Okay, so that was last two downticks had a decent amount of volume on it to ticket. 3,000 and 2,000 now. I'd have to say something is up. It might already be too late to be on board the train, but man. Let's see here. What's Jean-Philippe Bouchot on LinkedIn saying about his book? Our book came out in print almost 5 years ago. Our aim was to discuss empirical facts of financial markets and introduce a wide range of models from the micro-scale mechanics of individual order arrivals to the emergent macro-scale issues of market stability. We rooted all our discussions in empirical behavior of real markets with the hope to provide a new perspective on topics as diverse as optimal trading, price impact, the fragile nature of liquidity, and most importantly, how and why prices move and why people trade at all. The widespread availability of high-quality, high-frequency data has indeed revolutionized the study of financial markets by describing not only asset prices but also market participants' actions and their interactions. This wealth of information offers a new window into the inner workings of the financial system. Just as the atomic hypothesis allowed Maxwell and Boltzmann 150 years ago to understand how the macroscopic world is described by thermodynamics, trades and quotes are the elementary units from which price dynamics emerges. I am particularly pleased with the way the ideas developed in our book perfectly dovetail with the recent inelastic market hypothesis of Xavier Gabiax and Ralph Boyden, which in my view one of the most interesting and disruptive piece of work in financial economics. Several of my past posts already touched upon this topic, but I cannot resist mentioning it again, not least because in my inelastic market hypothesis provides a clear and convincing interpretation for a host of interesting anomalies for which the efficient market theory is totally clueless. The inelastic markets hypothesis is a long-term epitome of what we called in our book the order-driven theory of markets. Prices move primarily because people trade, whatever the reason they are trading, and much less because of unexpected news that change the elusive fundamental value of assets. Although very compelling for anyone who has a practical experience of the market, such a conclusion is still considered as blasphemy in many economics departments. But as Fisher Black wrote in his 1985 gem Noise, I recognize that most researchers will regard many of my conclusions on the importance of noise in determining prices as wrong or untestable or unsupported by existing evidence. In the end, my response to the skepticism of others is to make a prediction someday these conclusions will be widely accepted. I am ready to make a bet that 10 years from now, the conclusions of the inelastic market hypothesis / order-driven theory, a more sophisticated and explicit version of Black's vision, will be widely expected. In fact, reading Noise today, which I highly recommend, I cannot fathom why so many people haven't heeded Black and still believe that the efficient market hypothesis is roughly correct. In my view, the efficient market hypothesis is one of the most momentous intellectual blind alley of the XF of the 20th century. He's right. He's 100% right. I heard a little bit of clicking there, but it looks like the market's still stuck at 07.5 there. Apparently I don't know how to spell practitioners. Yeah, stay away from that one, QJ. with a I forget the figure of speech. We've had very negative experiences with that channel, and I would stay away. Okay, they're gonna trade through 06.5. I think it might take a few orders, but it looks like they're gonna do it. Can't really take it serious. I tell you what, man, it's I don't like talking about it on stream because like you give people attention and then it kind of always just brings more trouble. But I can tell you some stories, man. Like there's a whole big long history and drama over at that place. But they haven't bothered us in a long time, and I'd rather keep it that way. So a little bit trickled into 06, but decent sell-off delta-wise. Yeah, well, so for the ZB, this little move that we've got here is about maybe 7 to 10 contracts, 7 to 10,000 contracts rather. I mean, the delta so far here in ZN is about 15,000. And the thing that is interesting about this flow is that this flow has been going since about 5 o'clock. So it's been going for almost 2 hours, like slow and steady. This is not your like multi-leg meta order sort of a deal. It's just kind of like slow and consistent pressure. I am seeing the 6J moving along with it. And the thing that comes to mind when I think of that is, again, Nick Timmeros about 30 minutes ago. So this move started before he did this, before he tweeted this, but 30 minutes ago, he said, in Japan, inflation is rising, the yen plummeting, and some economists and executives blame the negative rate policy for eroded competitiveness and undisciplined government spending. All that has put pressure on the Bank of Japan to finally raise rates. So if the Bank of Japan were to finally raise rates, that would definitely do it. That would definitely cause the kind of flows that we're seeing here this morning. The kind of move has always been the most difficult for me to jump aboard, because you see significant absorption at every level, and it just kind of becomes a freight train that can't be stopped. And so I'm constantly seeing like, oh, okay, they absorbed 5,000 contracts there at 06 app. That means it's going to reverse, and then it doesn't, you know? Because the flow that's causing the selling just keeps coming and keeps coming. And how do you know how much of it is out there, right? Or when we're not even really sure where it's coming from. So in this kind of a situation, the only thing I've ever found works is to just sell it and close your eyes and sell it, you know? So you wait for this pullback that like it never comes back more than 1 or 2 ticks. Like there it is again, 1,700 contracts to sell 06. Oh, now at 05 half while they pull, but I bet you, well, okay, it ticks back up. I was going to say, I bet you that more than 700 trades if they decide to trade down through 05 half, but they didn't. Man, I want to say something here to John Philippe, but I'm trying to figure out how to say it. I'll say it to you, although I wouldn't, you know, I'm more focused over here on like the exact words. So he's talking about that this might be like one of the biggest blind spots because it's still like heresy in some circles. And what I have generally found from sharing this kind of information on YouTube is that it kind of hits at like a bias that is almost like fundamental to people's identity. But in this case, it's not personal identity. It's like the identity of our society as a whole. Because what we've been told is that our society is based on a system that is perfectly efficient, and that's why we've been so successful, right? So that markets are perfectly efficient, and that's why they're so competitive, right? When you come back and you say, well, actually, they're not perfectly efficient, and here's all of these problems with it, that is like you know, you're running into like some really deep-seated political biases there, right? And it's a little anxiety inducing, right? Because if it's just orders, what's to stop somebody like China from just perpetually manipulating the markets to their benefit, you know? So it kind of, you know, the efficient market hypothesis is kind of soothing because it kind of suggests that if you screw up, the market will figure it out on its own one way or another. And I think what we're learning is that that's not what actually happens. Contradicts. Okay, they are turning back up. Interesting. You know, I'm a little bit nervous about trying to trade it here now. It's interesting to me on Friday, like the interest rates I was like, oh man, if we get back to 3.5 and then below, it'd be, you know, I'm gonna feel really dumb. Because basically we only got like $10 off of it, and then after we left, it kept going and it kept going, and if you'd held on, you know, you could have made a decent amount. So now to see us all the way back up like 10 points to almost to 3.57 is kind of like, oh, okay, interesting. I guess that maybe gives you some room to sell rates and buy the treasuries here. And it's done that many times, right? Where the first move was a down move and then it slowly levitates up. So it makes me, I feel like that there's room to come in here and buy it, but I'm kind of a little nervous. I don't like trying to take a reversal off of, you know, just that the flow kind of reversed a little bit, right? Because I'm not entirely sure why it was selling so hard in the first place. But it wouldn't surprise me to see it rocket back up here to 10 really quickly. And like I've said, like I'm saying, like what you're going to find is it's like, if I get in a position, like let's say that I got in at 3.656, got short there, okay? Like I might be sitting there for a long time and really frustrated, and then I'll get out of it. And then suddenly in 2 minutes, then it will come down like 20 ticks, right? That's the sort of action that we should probably expect today. Is because of low liquidity, it will just kind of like hop and skip. Well, they're selling it down again, and I'm seeing the absorption again at 06. So I think that we got two big guys meeting in the middle here. They're going to transact, and then I guess we see where we go. When I see orders like that, I usually don't want to get involved. It's tempting to get involved when you see stuff like that, right? You might be able to make a tick, but... So can you tell when price closes on the order book without candlesticks? What do you mean by that? So to say what would be the closing price of the candlestick from just looking at the order book? I mean, I could wait until the very time and see what price it was, but you're not going to see anything too significant about when the 5-minute time frame closes. I have noticed a few like when you're looking for it, you'll probably notice a little bit of volume comes through when that bar close comes in. So there certainly are some robots and day traders like trading off of that, and you see some volume. But if you didn't know to look for it, you would probably never notice it. And I wouldn't consider it a significant force to concern ourselves with too much. Yeah, well, so I don't think that your questions are silly, QJ Verdun. Is just okay. So this is gonna go into like a weird subject. Okay, I just sometimes I'm not sure what you're going for in your question. So I was watching this TikTok the other day, and the TikTok was like allism for like basically allism is like you have normal brain structure versus you're autistic or ADHD or whatever. So I'm a little ADHD, so supposedly there are some social situations that I don't necessarily understand. And this was something that I guess I kind of knew, but I didn't realize that it was that big of a driver behind people's behavior. But now that I'm looking at it, I'm starting to realize maybe this is a bigger deal than I thought. And what he said was, people, you can be more direct when you're higher in the hierarchy. So like if you're the CEO, you can say to everybody exactly what you're thinking and what you think about something. But if you're lower in the hierarchy, you know, like you're the one talking to the CEO, you don't necessarily want to come out right away with exactly what you think. You kind of put some vagueness around it to kind of probe them and see what their real position is first before you reveal yours, so that you don't like take up a position that is in opposition to them, essentially, right? And I've never taken that approach. I always just say exactly what I'm thinking, right? Because to me, just saying exactly what I'm thinking, or what, especially when it comes to questions, right? When I'm trying to obtain knowledge, asking the direct question is going to be the fastest route towards the pieces of knowledge that I want to have, right? So I guess what I'm saying is sometimes I get the impression that you're putting a little bit of vagueness into your questions because of those regular social dynamics. And what I'm saying is that the thing that I think would be most beneficial to you is to be as direct and clear about the question as possible, so that I can understand why you're asking the question, right? Because a lot of this stuff kind of comes down to like we focus on the wrong things, you know what I mean? New lows, yes, in the ES we made new lows. The treasuries are there was maybe two kind of upside bumps a little bit, but it's mostly skidding around at 06 now at this point. So that might be like the liquidity hole weighted out time period. We'll see. Kind of interesting to see it form this at 7:15. The timing in the treasuries here this morning is a little bit off. Like normally you'd see like a big move starting at 7 o'clock to 7:30 and then like 7:05 and then it'd already be done. Then to see it like doing something and then holding maybe 15 minutes before the open is a little bit different. This is that anime one. Scratch, that is what it's called. Your practice account is up $100,000 from the trade of it. What? Really? That's funny. It was automatically filling limit buy orders far outside of price. Oh, that's funny. like one of the things is writing a proper sim is not so simple, right? If you really want it to be accurate, but most people don't put that effort into it, you know? It doesn't surprise me to see a platform come in and make a change and then have some weirdness go on with their sim accounts. Do you use your elite indicator package on this stream? Yes, I absolutely do. Well, not every little bit in there is stuff that I actively use every day. But there are a couple of indicators that are absolutely essential I can't trade without. So you can see right here on my screen, I have a synthetic dollar index up on here. So the dollar index is like my most important indicator, I think. And then the next most important is my spread charts. I have spread charts down here at the bottom here. I'm not using candles. I'm just using the line on close. Understanding which way the yield curve is going is very important. Right now we're flattening, right? I have some, so over here I have Alice on this one to kind of see how much opportunity is in the equity markets. Looks like they're starting to move enough that we could maybe take some trades. I have over here on this screen, there's these market depth tapes is an add-on that's included as well, and that will make a sound when there are large changes on the depth of market over here. So that really helps me out a lot too. So those are probably the most important pieces that I use. A lot of the stuff that I've included in the indicator package is also there so that you can try and like write robots based on the level 2 stuff. That's a lot more theoretical. I don't focus on that as much because that stuff is like, those are toys for you to try and explore and research the market, and I don't know what the end result of those to come out. We're still researching ourselves, right? It's information. It's information that we know is out there that you can't necessarily see with traditional tools, but what the behaviors of those data series actually is, we're not sure yet, right? So don't focus as much on those. Yeah, so really, like, the indicator package came about because it was like, there was a couple of things in there that I was just like, how are people trading without this stuff, you know? I feel like sound is a very important signal for the brain. Yeah, well, your brain interprets sound faster and more accurately than it does visual. So we're primarily visual creatures, of course. But like, if you want to have a fast reaction time to something, or you want to get the timing of something, it's much better to rely on sound. There's a tip that's really useful if you ever get into fighting games, is try and learn the timing of your moves and everything based on the sounds rather than what you see. Oh, I found your stream from your Ninja Script programming tutorials. Wish you had 2 more of those. Yeah, well, you know, so part of the thing, Dr. Purple. So I have a couple of videos in there somewhere where I am backtesting certain strategies, and so I program it and then I show you the problems with it, right? And those videos were not as popular, but that was kind of the next step of it. It's like, once you understand those main functions that you're gonna use in Ninja Script, once you understand those main functions, you really have the knowledge to make just about anything. Like in terms of the NinjaTrader specific knowledge that you need, like, that's the general knowledge that you need. Everything that comes after that are things that you learn just kind of doing it in practice, right? In other words, to learn from there, you have to make indicators, right? So that's kind of why I did that. And those ones I was just showing, okay, so here's how we go about making this one. Here's how we go about making this one. Is just that, like, any kind of straight technical pattern that you come up with is probably not going to be profitable, right? So because I can't come in and say, like, you know, most other channels I'd be like, look, this has a 95% win rate, etc., 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 right? Well, I'm always going to be sitting here coming in and like, okay, well, here's why that's wrong. Here's why that is an overly simplistic analysis that doesn't really help you, right? But that doesn't get the video views, right? So I didn't make as many videos with that. So the point is if you want more Ninja Script videos, the most useful thing that you can do for me is to ask specific questions about how to do certain things that are, you know, worthwhile for enough people to make a video about it. I do have a video planned about NinjaTrader 8 tips and tricks. So that'll probably be coming in January. I think I'll write and do that one over the Christmas holiday. So yeah, I must say though, I'm quite proud of my elite indicator package. It's something that I feel like that everybody that uses NinjaTrader should buy, and I'm just not sure how to market it better. You know, I feel like I should work more at that, because it's not just like, oh yeah, I do make money from it, right? It is money for me, and that helps the stream out too. But like with that one, I'm more concerned from like, how do I get more people to use this, because that is just going to be beneficial to them, right? Like, I feel like a lot of people are just not even, it's like trying to fly without all of your instruments, you know? You don't know what altitude you're at. Yeah, I guess you can look down, but there's uses to an altimeter, you know? And retail traders don't realize it because it's not built into the platform that they come in, so they think that maybe it doesn't matter, you know? Mama, good morning. Okay, well, they're pushing the upside a little bit more strongly here in the treasury, so I don't know if that's going to be a full reversal or not, but that's the best sign you've got yet that's what's happening. I haven't seen the flows reverse though, so this looks more like backwash to me, and the S&P 500 is going to be starting up here in about 30 seconds. Oh, did Jigsaw have another release I hadn't seen yet? Production release. Let's come in and see what the changes were. It's probably not worth me trying to update it here during the stream, but JT, FP stats, and CD are removed for IB feed. When we open charts, they never open at 100%. Fixed. Not being able to add Bollinger, blah, blah, blah. Candlestick. Point of control not being calculated properly. Looks like it's mostly just small bug fixes. That is sure is a lot of small bugs though. I'll definitely do it after the stream. I wish they had a demo version. I do too, QJ. I think the reason that Jigsaw does it the way that they do is because a demo version kind of becomes a really opportunistic place for hackers to hack the program, you know? So I understand why they do it. So the way that their approach is you buy it, and then if you don't like it, you can get a full refund. I mean, it makes sense. Like if you have the money, then you just spend the money now. And so there's, you know, the only people that system excludes are the people that don't have the money yet. So then they wouldn't be able to buy it yet anyways. So they're not missing out anything. You know, I don't know. So it's kind of like that thing. If you have a system that's fully technical and it can be figured out easily how it works by looking at your trading history, could the broker copy your system or sell to hedge fund? Can hide your order info? Geez. So I think that trying to figure out what somebody's exact strategy is from looking at the orders would be really difficult. You know? I don't think that the broker concerns themselves with that sort of a thing. So I don't think that would happen. I think that the bigger thing that you need to be concerned about is that orders have strong impact and the market is very statistically efficient. So how much you can size up on your trade. You might not be able to size it up as much as you think, and it's really hard to find one like that in the first place. And it's more likely that you're just being tricked by the statistics rather than that you've actually found a real statistical edge, right? So be more concerned about those things, and then trade it for 5 years, and if you can work it out, then go and start a fund. But I've never met anybody that got to that point. Maybe from trading fundamentals, but not technical analysis. Never. So this is the thing that comes up over and over and over again, is that as retail traders, we have this tendency to attach to conspiracy theories, right? In this instance, it's the broker that's working against you, right? And what I'm saying is that the reality is much worse. The reality is that the system itself kind of works against you, and nobody has to conspire against you directly at all, right? Like, the market just sniffs out technical inefficiency and removes it. Because orders have such strong impact, they can remove those inefficiencies very, very quickly. So the end result that you get is noise, where unless you really, really know what's going to happen, you're likely to just lose money, right? The system just works like that naturally, and nobody has to target you specifically. You just get screwed over by just the natural behavior that emerges from the rules of the game. Could you have an impact on the market since you're placing both? Yeah, listen, every order has a measurable impact, okay? You might not be able to move the market 8 ticks, but every order has an impact, right? And I'm just saying the number of contracts that it takes to, like, if we're talking about 1 tick, okay? If you're talking about 1 tick, I would have a hard time sizing that up more than like 300 contracts. Seriously, like 100 to 300 contracts. And at that point, you're becoming too big. That's like how little room there actually is. If we're just going for 1 tick in the 10-year treasury, at least in this current market. Because the way that you got to think about it is, like, right now, at every price, they're putting up like 1,500 contracts, right? So imagine you put 500 contracts down at a price, right? Like, say right now it's 684, you put 500 contracts down, it's going to be 1,100. That's a big change. They might not fill you. It's too many. You have to be small enough that, like, nobody's going to notice. Sorry, I don't know. I mean, where I used the word open, what context I was using it in. You should eat. Okay. I use fish oil. That helps. That really helps with inflammation. Man, I went sledding over the weekend and beat myself up pretty good. Well, okay, so, like, let's say that you put 1,000 contracts on each side in here. And listen, it would have an impact on the market. Having it on both sides might make the market more likely to get stuck in that area, but I wouldn't guarantee that you'd get filled on both sides, right? And then if one side gets filled, there's a good chance that they break through and push against it, and then you're at a loss, right? Wow, they sure went down to those new lows awfully quickly, didn't they? It's still kind of giving me this, like, I'm kind of stuck stuff, but there was a bit more volume in the 10-year on that too. It seems like there's some like really heavy flattening going on again. Or you see open on the chart. What do you mean? You are saying you see the word open somewhere? I don't understand. Okay, I think I finally wrote my my comment there after 45 minutes. It's still going. So we were talking about it at like what, 5, 6? So it's moved 1.5 basis points. I'm still seeing some relatively decent sized bids that they're plowing through in the 10-year. The 30-year is kind of lagging here, but the treasury's moving down like this probably would not be a good thing for the S&P 500. But right now, the S&P 500 is just kind of a mess, right? It's just chopping around. That could like change real quickly. Yeah, okay, so they are kind of pushing lows here. I feel like all it would take is like one good push down to turn this thing into a let's just sell it all day sort of a thing, right? Looks like we might have a pretty sizable iceberg order at 04. So they moved away from it, ticked back down. It was still about 5,000 contracts at 04. So I want to read an interesting post here. Here's from one of my guys on LinkedIn who is lead trader at Cargill. Won't use the name. When I'm asked to explain what it is to run a trading desk, I always use two analogies. It's like playing chess from a trench. Like a chess player, a trader constantly needs to think many steps ahead, and an important part of that is knowing and anticipating your opponent. In cash commodity markets, you know often who is on the other side, and in future markets, the COT gives you good insights. You need to think about different scenarios from every move you and your opponents make, logical but also deceiving moves. Like a soldier in a trench, a trader needs to think defense before offense. Try to think the unthinkable. You need to be patient and build trust among your comrades to ensure adverse markets move together. To endure adverse market moves together. There we go. Genuine camaraderie, knowing you have shared values and interests, is critical to deal with emotional ups and downs of trading. The ups can be dangerous as they may lead to complacency and not holding your guard. There's always someone willing to take your money, and there are many bad actors on the battlefield. For morale, it is best to listen to your team, to be honest, candid, act with integrity, not cut corners, and come to action together as a team. And when things go wrong, the desk head takes the heat from superiors. Now, with those analogies in 2022 in mind, think about the messages from crypto thought leaders last week. Bitcoin is engineered to increase forever. exponentially growing behind a wall of encrypted energy, blah, blah, blah. These narratives are designed to convince millions of hopeful and uninformed followers of only one inevitable scenario without room for doubt and counter-arguments, which are rejected by canceling or a simple mention of FUD. The crypto space has become a cult-like movement. It is facilitated by social media and exchanges who, under a thin layer of marketing buzzwords about easy investing and trading without complexity, lure young people basis FOMO and peer pressure into gambling. These narratives also risk creating division in society and funding conspiracy theories about democratically established government and economic institutions. To understand more about the importance of these institutions, I strongly recommend one of the best books I have ever read, Sapiens by Yuval Harari. All I have learned in 25 years trading commodity markets, the economy, integrity, and leadership is non-existence in the crypto space. I tend to agree. It's now been 8,000 traded at 04. Yeah, this chart over here. So there's this whole thing where people say like, here's the 2008 market crash versus today. So like the original anchor that they used for this, they've kept shifting, but now they have it marked up like this. So they're saying because it went down in 2008, it will go down again. Well, it wouldn't surprise me to see another downturn in January, but in order to see a move like this right here, I think you'd need to have some sort of active crisis going on, which I don't see yet. So I don't think this scenario is realistic at all. If anything, it's going to be much more drawn out if it does go to the downside. And there is a chance that we turn around here and bottom. Possible. Well, I'm thinking about it. I should download the new Jigsaw version. Could see a bit of balance. I don't see that. I see a market that is selling tepidly, but not really moving all that much. So the market sellers are not aggressive enough to really be pushing the market down all that hard. Right. Like balance is kind of different from nobody cares, right? Except for that it's not that nobody cares. Actually, maybe it is that nobody cares. I mean, it's been 30 minutes, the open. It's just been a very lackluster open. I guess what I'm seeing here is I do think that the market will probably have some like unclenching from all of that gamma that we just rolled off on Friday. But beyond that, the market so far seems to be suggesting that everybody's gone on vacation, right? Like they're not as interested in trading it anymore. Now, the treasuries, I feel like, is maybe a different story. The treasuries have just been plowing and haven't stopped. I wouldn't say that it's like a crazy move, but it's been about net 30K. Like, what's crazy about this move is how persistent it's been. They have not really let up at all today in the treasuries. So it's very, very consistent sell side pressure that is very unexpected for me. I was kind of leaning towards they would maybe go to the buy side again, but maybe somebody is putting on a really massive trade. Maybe somebody is saying they need to go back to 4%. That could be the trade, because or it's a sovereign wealth fund or something, because it's just been very persistent selling here this morning. I do wonder, like, I see the next set of flows probably being buy in the treasuries, but the prices that we're at, like, I have a hard time seeing the 10-year yield staying below 3.5 for very long, That just 3.5 seems too low to me, given current conditions. Putin embraced by Lukashenko in rare state visit as fears mount that Belarus could join the offensive. I have kind of been seeing that as well, that like Putin might come back even more aggressively and try to actively take Kiev again, is the rumor. Where is... Oh, here it is. I was looking for my fidget toy. It's black on a black desk. Any expectations for housing? Are you meaning, is there a housing number coming up this week? I think there is, right? It does seem to me that some like home like landlords and stuff are selling now. Oh, the NAHB housing market index. That one. 34. I don't know about that one. That's not the biggest housing numbers though. Like that one's usually not as big, right? Can't recall. Let's see here. If I come in here, none housing, life filter this month. Yeah, the housing permits and housing starts, existing home sales is the most important one, right? This one doesn't even show up on Forex Factory as a housing number. That's interesting. NAHB housing market index. What category does that one show up as then? Well, so it's about home builders. So that's one thing, is that maybe tells you more about home builders than it does about the overall housing market, right? Want to know what kind of number this is considered? Is it just miscellaneous? No, it wasn't miscellaneous. It was business surveys. Okay. It's considered a business survey. That's interesting. Okay, they got 31 versus 34. So, bad number. But yeah, you see the treasury market's not really reacting to it. Not that the treasuries are buying yet. The treasuries are still sitting here like, you should have bought rates back at 3.56 and just held it all day. I'm seeing slightly more supportive price movement in the 6-day, so maybe things have changed a little bit. My biggest thing is still that the S&P 500, it looks awfully sleepy, right? Which is why I was saying, like, the issue is I think that you're going to see a lot of lazy action and kind of jumpy action where if it moves, it could move really fast on low liquidity. But otherwise you get dull action. Either way, it's like, it's really hard to trade, right? In ES. I feel like this action is very, very difficult to trade in ES. Unless you're going for like a tick. Or 4 ticks. A point, maybe you could get away with a point. A fairly decent amount of chatter on Twitter, but it's just like not about much. They're talking, but they're not really saying anything. Forex Live comments on the number home builder sentiment is on the brink of breaking the pandemic low. Wow. I don't know. I'm still a little concerned that like something could come in and prompt some buying in here. I mean, I'm still seeing a decent amount of volume come through in the 10-year. It's just kind of sitting there. This could be a lot of this week. Like, might actually be worse the later into the week we get, right? Just to prepare you guys. You know what we probably should be doing is I should probably be using this time to try and memorize things, huh? Could be studying. Hmm. I need to stay engaged over here, at least today. I'm sitting there like, oh, I should study. And then I'm like, well, I could just like not stream and study. That'd be even better. But nah, I think we need to at least stick on until the holiday. It's not, we're not on vacation yet. Not just yet. I think the kids have 2 more days of school too, which is weird why they would have to. Anyways. Okay. Well, I was significant when I was seeing them push through 2000s on the way down. Now I'm seeing them push through 2000s on the way up. So I think a decent number of contracts are trading hands here today. Somebody's doing something in the treasury market, at least. It must be something like sovereign wealth funds are selling and risk parity funds are buying. And of course, if you were a risk parity fund and you wanted to buy the bonds right now, I think you would want to make sure that you got the best price. You wouldn't want to buy up into it. Where is the Santa rally? Oh, well, so I feel like we already had it, to be honest with you. Like when I came in at the beginning of the month and I was saying, well, we got a bunch of news events, but then the flows look positive otherwise. That scenario totally played out, and I think that they made it about as far as I thought that they could make. So I don't really have a prediction for the rest of the month. You know, it was like they made their money and then it came back really hard. I don't know if that downside momentum continues through the end of the month or not. I would say that there probably is going to be some gamma unclenching, and I suspect that that would mean some buying today. But if that comes in, it might not happen until like close to the end of the day. I don't know. It's certainly not happening right now, right? So, yeah. This is the most iceberging I've seen in a long time. Well, the funny thing, Octavius, is that the amount of iceberging that we're seeing is kind of more in line with what the treasuries used to be pre-pandemic, huh? This is actually like fairly normal action in the treasury. But in this context, it's unusual because, like, man, he sold it. It just shows you how weird of a market we've been in, that normal just is like such a big deal. But you're right. There's also a lot of iceberging today. There's a lot of there is more liquidity than they are showing, for sure. There's more liquidity on both sides than what they're just showing. But I don't know. They've kind of been skidding along the bottom here at 04.5 after that little push further for a while. They might be ready to have a push up in the next 10 to 30 minutes. They are kind of pushing to the upside, so maybe the buyers are going to have a moment here. It could depend on S&P. S&P is still just looks like I don't see it like it's not like selling super hard, but they do look down in the dumps, don't they? They do look a little depressed. The equity markets do. Well, so there's another uptick in the treasury. Sell 3575. Nope, still too nervous. Still too nervous to do it. So I'm looking at my camera here because we changed the color of it and everything, and I don't like it. I feel like it makes my face a little bit less. Yeah. I think 5500 is better. The cooler one kind of makes everything look subdued. I don't like it. Oh, 06. Well, I don't know if he would have gotten filled at 3575, so let's say 357. If it crosses it. Jim Iurio was Elon's plan all along to hire a CEO. Who knows? But who? Who would it be? Jigsaw sure has been putting out a lot of blog articles lately. The net takeaway from this article was, without exception, every professional trader I've discussed trading with has put getting out of bad trades early as one of their top 3 factors in their success. It's usually the top 1. Of course, it helps if you aren't getting in at the wrong time too, but that's a different issue. The thing is like, not having the stop there immediately and that sort of a thing, it will on average increase your win rate, but it will also increase your left tail, right? Because the net effect is it ends up you taking on more risk. And he's right. From our perspective as retail traders, and trying to be informed traders, minimizing the losses is paramount. Like, if you're correct, it shouldn't be moving against you, period. If you're truly informed and the flows are actually coming in, then you generally won't need to take very much heat. So minimizing the adverse excursion is, I think, very, very important. Yes. I think during the period where I was having a hard time in like November, was it? Like end of November? I think that was one of the things that was working against me the most, was that I had a couple of trades where it just went against me, you know? I was dead wrong. And of course I did get out early, but that's why it wasn't going very well. It was not getting that flow coming through like I wanted. I didn't understand that market very well. Felt like I don't necessarily understand this market very well either. Although I did make like, what, 3-4 winners in a row last week? So, I don't know. Can the E-mini get back above that previous day close or whatever, 38.871? It looks like they're going for it, but they're kind of struggling, huh? seeing the Japanese yen. Really does look like it's turning around, but doesn't seem like the treasuries are gaining confidence from that. So I had people, a prediction about lower volatility. I wouldn't, you know what? No, I wouldn't say that the prediction was lower volatility though, right? I think the prediction would be like lower volume. So that generally will mean lower volatility, but the reason why I caution about that is because there probably are some points at which it gets through and you could see like really wild volatility in an illiquid market, right? Like that's still a possibility. But either way, you kind of get this thing that's like, it's just not very conducive for day trading, is it? Right? Because what ends up happening is you're trying to predict the movements of like one individual trader, and when he comes in and makes his move, he makes his move, and if you catch it, you caught it, and if you didn't, you didn't, or if you're against it, you lost. And there's no room for you to shift around or do anything. It's just kind of like a luck of the draw. It's never resulted in good trading for me. Ugh. How do hedge funds such as Renaissance make sure their prime broker doesn't leak their trading info, such as the time, the price, etc.? Well, first of all, I don't think that Renaissance Capital uses a prime broker like that, but I could be wrong about that. I don't think that they use Goldman. I think that most of the time they're directly connected to the exchanges and doing it themselves. But I don't think so. So number one, even if you had all of the orders, there's no way you'd figure out what Renaissance Capital is doing. What they're doing is very sophisticated, right? It wouldn't make sense. It really wouldn't. It'd be like, oh wow, yeah, that really seems to work, but what the signal is, I don't think you'd be able to figure it out. You need really advanced math. But I think you're a little bit too concerned about your broker leaking some information or something, right? There's so many other bigger problems that you can run into before something like that would be a thing, right? The bigger picture though is that the brokers don't look at that stuff. They really don't. It's not like the amount of money that they could make from trying to front run you is probably not worth the risk of what kind of trouble they could get into from it. They're gonna make more money just doing their thing and executing trades and being a broker. Sam Bankman-Fried expected to drop extradition fight at court hearing. Yesterday, Futures Trader 71 said something that was basically like, I'm sick of hearing about Sam Bankman-Fried, and I was like, okay, that's a weird take. That's what everybody's interested in, man. I'm not so interested anymore, but sounds like the news I'm seeing this morning is that he's probably going to drop the fight against extradition. So. Man, when you look at it on the DOM, it's like, man, it would not take very much for them to push to new lows, right? But they've been sitting here for a really long time. What do you have to compete if you want to connect straight? Well, you have to buy a seat on that exchange. There's all these other qualifications. And I mean, there's different things on different exchanges and stuff, right? But let's say one of the things is that Renaissance Capital, a lot of their initial success started in the futures markets, is my understanding. And so probably they did get a seat on the exchange and were executing it themselves, and they were not going through a broker, right? I mean, the whole thing is that your broker could read like your direct order flow per se, right? But everybody can see the orders hit the market. Like all of that net information happens anyways, right? And can be analyzed. So the reality is that any kind of statistical anomaly that you find, there's robots out there trying to sniff it out from you. So if you really have a technical edge, you got to be really careful about how big you size that edge and advertising about it and so forth, because that's just the nature of the market. Nobody has to do anything underhanded or illegal to be able to, compete for that inefficiency. There's the Santa Claus rally. Well, they sure did turn back up pretty quickly that last 1 minute candle, didn't they? It's like as soon as they crossed that divide, it was a pretty strong up. Although, with the way that this market has been going, they'll trade 38.85 and turn back down, huh? So let's see. There was some volume on that though. In fact, it's almost equal to the amount of selling. Although they didn't quite make a new high. That's interesting. Well, we might just need to give it a little bit of time. I'm afraid of it will be a very small Christmas rally. I would say it hasn't completely turned through. Like in order for me to get too excited about a Christmas rally, I think I'd need to see us out like above. Well, okay, so like in order for me to be like, maybe we're gonna get a Christmas rally going into the end of the year, I think I'd need to see us above 3,900, which might not happen today. But here on this one, they're still kind of coming back up to the like where we started, so I can't get too excited yet. I guess we need to see us like above 38.90 for that to really be like a clear shift of the trend. Avatar sequel misses estimates, but theater executives are not concerned. It looked like the reviews for it weren't too bad. Maybe I should go see it. Maybe we should go see it. Is there anything else coming out this month? No, I guess not many significant ones. The system would efficiently stop working by getting stopped by algos. If you was that person who has the edge, would you start a hedge fund or sell the edge to a bank and then make a big? Well, I do think that you want to make the money as quickly as possible, but the trick here is sizing, right? The thing that will tip the rest of the market off to your trade is size. And what usually happens is when people find a statistical edge is they start sizing it up and they share it with everybody, and that ruins it, right? So the first thing is you'd want to keep it just to yourself, right? But then the second thing is you need to develop a method of determining how much the market can take. So one suggestion that I've heard is you just slowly raise your size on a consistent basis, and then once you see the performance of your system start to decline, you immediately back off on how much you're trading, right? A better way of doing it would be using like some sort of a model like Albert Kyle's model from his paper in 1985 about insider trading in a continuous auction market. Anyways, that has some formulas that you could use to potentially calculate what the optimal number of contracts to use is, right? And then from there, yeah, I would try and make the money as quick as possible. And I mean, the thing is, the advantage of starting the hedge fund is that you can hire employees, and that helps you find other edges, right? That's how the Renaissance Capital thing kind of started. Like, note that Renaissance Capital did not necessarily have immediate success. It took them like 10 years to really come across the edges that were like really mattered, really moved things for them. And got them to the point where like their 30-year return was like annualized return was like 60% or something like that, right? They developed it over time. So if you're going to be in the statistical trading, algorithmic trading route, it's very unlikely that you just find one edge and stick with it for the end of time, right? Of course, you want to do everything you can to keep that so that strategy yields as much for you as possible, but you're probably going to constantly be going through different edges all the time, right? It keeps coming down to that low, like I'm gonna do it, and then nothing happens. I think that they might need to pull back a little bit before they make another new low if they go for it. Like, it's been at 3,575 for a long time. Ugh. It's making me sleepy. It's been there for so long. And like, look, after this really great upturn, now the last 5 minutes has just been sideways. Oh. Maybe. Well, the 5-year went, but the 10-year not quite making it. Okay. Here's one contract at 03.5. been kind of keeping an eye on Twitter here to see Elon Musk tweet. That hasn't happened. No, tick back up. It does make you wonder. Elon Musk coming over, looking at the results of his poll. What's going through his head right now? Is it like, oh man, I'm not as popular as I thought I was. This was a really dumb thing. I shouldn't have said that. Or is he like, I see you have fallen for my trap card, right? I'm not a mind reader. There's a lot of people on Twitter that are mind readers and are pretty sure that Elon Musk is crying in his bedroom right now, but I am not one of those mind readers, so. They're pretty healthy liquidity on the inside there in the treasury on both sides, considering how long we've been in this spot. Maybe they are ready to move. Maybe the robots are saying, okay, I'm ready, let's do it. Okay, they sell 04. Well, it looks like a little bit of a ugly down move in oil there. Still the biggest winner today, but it hasn't moved much. Quiet. I'd have to say relatively quiet market so far. So dumb to check for popularity in a social media ruled by hate. I don't know. I mean, the whole thing is that Twitter leans left, and so I would expect the results of a poll like that to lean left. I mean, and the bigger thing here is that for Elon to have tweeted it like that, like I will hold to the results of this poll, are kind of like, there's got to be a catch. Maybe it's like I didn't say when I would resign, and he still stays there for like 2 years or something like that. Who knows? Like the whole thing is, who would be the CEO? I don't know. But surely he's going to say something today, right? Or maybe he just shuts the whole website down and we have to move on to Mastodon. Oh, that would suck because I'm not so impressed with Mastodon so far. Well, he could. He's forced to hold his position now. I mean, I think the whole thing is that he will remain owner and can make any decision that he wants, but he could leave the day-to-day operations of Twitter to somebody else for sure. And he might even want to do that because Twitter's probably not going to make him the big bucks, right? And he's losing wealth right now. If he cares about, some of his initiatives, if he cares. I mean, I know he cares. I think he's obsessed about those things. So I think it would make sense for him to want to shift back to his other businesses and put his attention on that. For sure, right? So that's what I'm saying. Like I wouldn't expect this poll to be what it appears on the face of it, right? So there's lots of people saying that, like, oh, Elon's not as popular as he thought, haha, etc., etc. And I was like, no, don't think so. Maybe he doesn't want to be at the head of it anymore. Maybe he feels like he got done what he wanted done, and now he's okay with giving it to somebody else that he trusts. But who does he trust? Who knows? Okay. I tell you what, it's just like killing me sitting here watching the treasury just sit there at the low. So basically what we're going to get to is that for the day in the treasury, the maximum amount that we could have made if we had chosen to take a trade was probably 15 to $20. And there was never an opportunity to go short rates, or rather buy the treasuries. Even though when I came in, I was like ignoring the move that had come down and that the momentum was down against us already. So maybe it's wrong. I was leaning towards long. So, But another thing is again here, like it has sold starting at that time, like many times in the past week. And I wonder if there's like some sort of sovereign wealth band or something like that is executing at that time. And then today they just didn't buy it back up like they have in past days because like nobody's actually out there watching, you know? I think my back is all out of whack from sledding, man. So when you get really deep snow, what happens is the sled runs are more likely to get bumps in them from, you know, people hit a little bit of a bump and then they push down and that compacts the snow and it just kind of does that more and more and more until you get a really big jump off of it. So when we went to the hill, by the time that we had been to the hill, it was like, yeah, it was just like that. It was like really big jumps on the sled on the it was awful. And so you couldn't go off it without getting launched. And then I mean you're still landing on snow, but it knocked the wind out of me. And I'm still hurting 2 or 3 days later. I was looking at my email and there's the Bond Buyer. It's a website that I've subscribed to. It's having a 60% off sale. So you can join now for only, instead of $58, only $23 a week. $23 a week. So it's actually like $80 a month. I forget what information was there that was good. I think my recollection was that it would be really good if you were like trying to do municipal bonds and stuff, but I don't know if it would be too helpful for us. Oh, well, here's an interesting one from December 16th. So on Friday, steady to close a busy week, new issue calendar slows to trickle of deals. Municipals ended the week little changed ahead of a paltry new issue calendar as the market winds down for the year. U.S. Treasuries were mixed and equities ended the week in the red. There's not much more before you get to the blah, 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 the paywall. See, options. They have options. Oh, they have one that is $17 a week and one that is $23 a week. But the $23 one week one has original research reports, exclusive market data sets, and the bond buyer newspaper on weekdays. Student discounts are unavailable. I tend to be a student. Unis take a pause. Well, it's back to outflows for mutual funds. Outflows returned as Refinitiv Lipper reported 1.217 billion was pulled out of municipal bond funds for the week ending Wednesday, after 46.912 million of inflows the week prior. Seems like information that we would want to know. But most of the data that you're getting there would be more useful if you were in the municipal bond market. So maybe if I was running a bond fund, it would behoove me to subscribe to them. The 30-year is turning up, but not and the 5 is kind of maybe a little bit down, but not the 10 is still staying put. I wish there was something fun or entertaining to say, but I'm looking at this like, as this is what we got ahead of us this week. It might just be really dull. We should probably come in and ask ChatGPT to write some stuff for us. Let's see here. OpenAI. Write a trading plan for the 10-year treasury market in the second half of December. So I'm seeing 6J continuing down here. Treasuries haven't moved yet, but the dollar is moving. Oh, there you go. It won't. The robot refuses to write any specific trading advice. It's not appropriate for me to provide specific trading advice as I am an AI language model and do not necessarily have knowledge or expertise in financial markets to make informed decisions about trading strategies. Additionally, it is important to note that trading in any financial market carries risks and is essential for individuals to thoroughly research and carefully consider their own financial situation before making any trades. However, a trading plan for any market should include a clear set of roles, risk management strategies, and a plan for analyzing and interpreting market data. Blah, 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 blah. You're useless, OpenAI. I see all these people on TikTok. They're like, "Oh, look, it wrote a whole automated trading system for me." And then I go and I look at it and I'm like, "This thing is useless." Oh, now that's interesting. The 10-year actually ticked up a tick, even though we're getting some strong buy flows coming into the dollar. Yeah, what this is interesting. So when I'm looking at like my currencies and so forth, the 6J is down at its lows, the British pound is down at its lows, the Swissy is down at its lows, the euro is down at its lows. So it's some strength into the dollar overall. But it's curious to me that the move is only happening in the dollar, and I'm not really seeing many of the other markets really moving. I am seeing copper seeing a little bit of a drop. I guess also gold. We're seeing gold is dropping here. Let's put it from like that point right there. Yeah, gold down. It's kind of been accompanied by when the S&P 500 peaked. But it's certainly a you know, in the dollar market, that's a pretty significant move, but on none of the other markets is really a big deal, and it still seems kind of sleepy. So stop run, maybe. I mean, since I can't see the flows over there, it's kind of hard to say, huh? Could be dip buyers. I don't know, the timing of it and everything seems kind of odd. Yeah. Could provide some opportunity for us. I'm not sure if it means buy treasuries or not, though. I mean, wasn't the trend early in the year that the treasuries would sell as the interest rates got higher, and that made the dollar stronger? So stronger dollar, wouldn't that mean higher interest rates here at the moment? But they are backing off a little bit. The split side of that is you could be seeing a flight to safety trade where they buy dollars and then they convert those dollars into treasuries, and then that would be a buy treasuries. But It's only up 2 ticks in the treasuries, so I'm not sure if the treasuries are reacting to the dollar here at all. I would say 20 cents, though, is relatively significant, isn't it? Germany voted in favor of EU gas price cap. EU officials. Let's come over to natural gas and oil here. They are selling here at the moment. The sell in natural gas corresponds quite nicely with the move in the dollar. So the move in the dollar may be because of the price cap. You know, earlier I wanted to read more about Epic Games and I couldn't find anything. Doesn't look like there's much beyond the Wall Street Journal story anymore. Wonder if anybody on Reddit has anything to say about this. Saw that on the domino looked like a stop run. Are you talking about like in the Euro FX? I don't know. Like the flow that we see in the FX futures is not necessarily what you're seeing actually out there, right? Because you got to remember that this is like interbank. So a move like that is probably driven more by a large bank moving money across than yeah. I've found that the flows over in those instruments are different from the flows everywhere else. They're kind of weird, so probably can't analyze them quite the same way. Too long didn't read. Turning on voice chat by default, not prompting for parental consent for players under 13 and making it too easy to purchase items without credit card holder consent. What they're being charged for. Kinda shady. And they don't want to fight it, huh? They're just gonna pay the 500 million. It's probably the right thing for them to do is to not try and fight it. Probably would be worse for them. Yeah, they won't move the international interbank spot FX rates and swaps, but they could be mimicking them. Yes, or more accurately, chasing them, right? So that's why if you get a big move like that in the FX market, you watching the order flow on the CME exchange might look like a stop run, But that might not be the reality on the ground, and the reason why you would get that kind of funkiness is because all of the retail traders are kind of reacting after the fact to delayed information. So doesn't really tell us what's going on. You know, I need to know how much money changed hands, you know. Probably are ways to figure that out, though. But I think the bigger thing here is it's not really affecting the treasury market, which I think is kind of interesting. But I think that probably coincides with supports my theory here, which is that it has something to do with the price caps, the EU price caps. So I'm hearing that Germany did vote yes on the price cap, which I think is a big change from what people thought. So that might be why all of the money is shifting around. And I can see a significant change in oil, and I can see a significant change in natural gas around that time, but not a change in treasuries. So yeah, it could be a commodities driven thing instead of an interest rate driven thing. I think that makes sense. It's not a scenario or setup that happens very often, but I don't think it's the first time we've seen something like that. We've certainly seen like the dollar move when there were big moves in oil, for instance, right? So I think that all makes sense. The dollar rising is not really a positive thing for the market overall, though, and S&P 500 is at its lows. Maybe just on the edge of breaking, and then you could maybe see some further downside. Secretary General making a comment about losing the Iran deal, and I'm like, I'm pretty sure that one's not happening. They've been talking like a deal was imminent for a year now, so. Yeah, it'll look like a stop run, but it's just arbitrage racing to get the fill with market orders. Yeah. I mean, if I see market orders hit like multiple prices all at the same time, then maybe it's a different thing. But the whole issue is it's just really difficult to know what, you know, we have no way, at least with the data that I have, of knowing whether an order is a stop order or not. So it seems to me like the difference would be significant in this particular situation, wouldn't it? You know? All right, guys. Well, here's my stopping point. I gotta get going. We're just gonna put on quiet markets. Markets already on vacation is going to be our title for today. I will catch you guys tomorrow, same time, 8:30 Eastern time. In the meantime, stay excellent.